Let's continue with our results analysis and invite our next guest, Kapil Mehan, Managing Director of Coromandel International. Good morning, Mr. Mehan. Thank you very much for joining us.
Good morning.
Can you add some color to your performance? It looks like the numbers are good, but when you compare it to, say, the second quarter, the margins appear to have dipped a bit. Even the total income compared to the previous quarter looks lower in terms of consolidated numbers. Can you take us through the highlights? Is quarter on quarter the wrong way to look at it?
Yeah, let me just begin by saying that, this quarter, October-December has been challenging because of demand conditions have been very, very challenging. The rainfall has been low, and it has been low in our area of operation. The acreages have been down by about 7% from almost 62 million hectares last year till end of December. This year they are down to 57.7 million hectares. The sales have stayed on where they were at the industry level. So under these circumstances, I think our performance has been quite good, and we are quite happy with that. And I would also, as I have always done so, that for agricultural businesses we should not look at quarter-on-quarter performance because there is no steady demand for these products throughout the year. So we should actually look at trailing 12-month data to really get a sense of it, because even within a quarter, sometimes the seasonal shifts do take place. But having said that, let me say that we have been able to improve our margin. We have improved our sales by about 7.5% year-on-year for the quarter, and our volumes are also up year-on-year. Our EBITDA margin is up even though marginally, but our working capital has come down. So with the result, our interest costs are down by over 25%. So that leads us to get almost a 28% increase in our profit after tax. So I think these are some of the highlights. Our net debt equity ratio is down to 0.91 from 1.03 as on end of December last year. So if you look at all these factors, I think the quarter has been reasonably good. You mentioned about the margin compression quarter on quarter. Again, I would say that look at it year on year, and our manufacturing margins actually have been better than last year. Last year we had about 8.1% margin. This year we have got almost 8.5% because proportion of trading income this quarter is higher due to higher imports that we had to resort to during the quarter to meet our demand of our customers in the market, as well as we got little more urea during the quarter. So that has been the major highlights as far as this quarter is concerned. There have been some headwinds also. Rupee has been a little bit higher than what we would have imagined. Gypsum sales have been low because of cement industry not doing very well in Andhra. That I think everybody is aware. I think barring those two factors, I think by and large we are satisfied and happy with what we have done in this quarter.
Sonia?
Okay. Mr. Mehan, good morning. How much have ammonia prices risen in the quarter gone by, and do you expect to see any further margin pressure due to higher raw material prices, or will it be passed on to consumers?
Well, during the quarter, we did take a price increase of about approximately 4% during the quarter. And ammonia price went up by almost $100 per ton, from about $520 at the beginning of the quarter. We saw prices going up to $640 per ton. But now they are coming off. So going forward, we don't see that pressure will continue from here onward, because we have already seen a correction of almost $100 in ammonia prices. So that is behind us. The rupee has also appreciated back to below 62. So that also is a positive factor which will help going forward.
Okay. Can you just tell us what the forecast is as far as fertilizer volume growth is concerned? In this quarter, you saw about 8%, and the margins stood at 2,700 rupees per million ton. Can you tell us about what the expectation is for Q4 and for the first half of 2015?
I think, we always have maintained that an EBITDA margin of about rupees 2,000 per ton is a good margin for this business, because we must also be aware that, we are dealing with farmers, and, we have to maintain and keep our prices consistent, because otherwise, the demand elasticity is very high to price points. So I think we'll be able to maintain our prices, given that there is a little bit of softness in international prices of raw materials. And we are also expecting that the new budget will have some good news for the domestic industry, whereby the inverted kind of a duty structure hopefully should be addressed, and where raw material duties will come down as compared to the finished fertilizer. So I think that should also be helpful going forward.
Can you give us some color on how much is the non-subsidy business likely to be next quarter or even next year? At the moment, I understand it contributes about 18% to your revenues and 36% to EBITDA.
Well, I think currently we are at about same level as far as top line is concerned in terms of subsidy and non-subsidy businesses. We are at about 18%, and in terms of EBITDA, there is a little bit of an improvement. We are now at about 63-37. So non-subsidy business has actually performed better this quarter, and that's also a strategy of the company to keep driving the margin growth of on our non-subsidy businesses, so that we have a healthy and steady revenue stream going forward.
Okay, so can you give us some guidance as to how this quarter and next year will look like in terms of both revenues and margins?
Well, I think as a policy, we don't give any guidance on numbers, etc. But I can only say that the market environment definitely is better. Pipeline stocks are low, and by law of averages, we should see better than normal monsoons going forward. And I think those things should help us to be better, as our raw material supplies also will be better, because our Tunisian operation is now stabilizing. We have had better performance this year, and going forward we will have more supplies coming in from there. I think Foskor also, we have now a new team in place in our Richards Bay plant of Foskor, so I think that should also help us to get more supplies of phosphoric acid. I think that is one constraint which we sort of sometimes pushes us to import more, but I think going forward that should be less of an issue. So our trading income, actually we expect it to come down in the coming year.
All right, Mr. Mehan, we'll leave it at that. Thank you very much for joining us and giving us so much of detail and color on your third quarter numbers.